Now we come to the third component of the cash flow, or third type of cash flow that you will have as part of your cash flow statement when you prepare it. So that is your cash flow from the financing activities, and we have understood what is the meaning of cash flow from फाइनेंसिंग एक्टिविटीज़. अभी हैव अंडरस्टूड कि भाई एक बिजनेस है, उसको एसेट्स परचेज करने हैं, तो एसेट्स परचेज करने के लिए कहीं से तो पैसा लगेगा. तो कहाँ से पैसा आ सकता है? तो रिमेंबर इन केस ऑफ a new company, the money can come from two sources, equity and debt. In case of an existing company, other than equity and debt, for funding the assets, cash can also come from the operating activities. So when in case of a running business which is making profit, generating cash, so that cash can always be used by a business for funding the investments. But that can happen only in case of a running company. But if it is a new company, then there are only two sources, and that is equity related and the debt related. And the principle that we follow is again very simple. If money is coming in, whether by way of debt or by way of equity, it is inflow or it is cash inflow on account of financing activities. If the money is going out, whether on account of debt or on account of equity, it is cash outflow from the financing activities. So we understand, नया शेयर इशू किया, कंपनी इज इशूइंग न्यू शेयर्स. Since the company is issuing new shares, the money is coming in, cash flow from the cash flow from the financing activities. The debt is coming, the company is taking debt, the money is coming in on account of debt, so cash flow from the financing activities. Now, when will it become cash outflow from the financing activities? So, आपने कर्जा लिया. Now, obviously, you have to keep on repaying this debt year after year. So, when you repay the debt, the cash is going out of the business, and that is how it is cash outflow on account of the financing activities. In case of equity, how can that happen? In case of equity also it can happen, because sometimes companies may decide to buy back their own shares. So when a company is resorting to buy back of their own shares, in that case what will happen? The company will buy the shares back from the shareholders, and company will pay money from the kitty of the company to such shareholders. So money will be going out of the business, the cash will be going out of the business on account of the buyback of the shares. So these, friends, are the three different types of the cash flow from different activities in case of the cash flow statement, and this is how it is prepared. Just to give you some additional input, the best part is one does not have to worry about designing their own format for the purpose of making the cash flow statement. In case if you are a company which is not listed on the stock exchanges anywhere in the world, in India or outside India, or your company is not in the process of or your company is not in the process of getting these shares listed in India or outside India, in such a case, what will be applicable to you is the Indian GAAP. And under the Indian GAAP, there is AS3, which is on the cash flow statement. So you just need to follow the standard or AS3, which is on the cash flow statement as per the Indian GAAP. But in case if your company is listed on any stock exchange other than the SME platform, please remember, Indian accounting standards are applicable only to those companies which are listed on the main board of NSE or BSE, or they are listed anywhere in the world, or they are in the process of getting listed on the main board, or they are in the process of getting listed anywhere in the world, or the company's net worth is more than 250 crore. So even if you are not listed but your net worth is more than 250 crore, India's becomes applicable to you. In that case, you will have to prepare the cash flow statement as per Ind AS 7, which is again on the cash flow statement.